How do investors become part of the elite club of 5,000 stocks and shares ISA millionaires? Well, today I'm going to break down how UK investors can become ISA millionaires by sharing how much investors need to invest, how long it would take to become one, and how investors' choice of investments will dictate how long it takes to go from £0 to £1 million. This video is also sponsored by Lightyear, but a little bit more on them a little bit later on in the video. First up, just a reminder, this video is also for educational purposes only and should not be construed as financial advice. Nothing that I share within this video is an investment recommendation. I am not a financial advisor, so if you do need personalized financial advice, please seek out the help of a qualified financial advisor. It wouldn't be right for me to start this video off without explaining what a stocks and shares ISA is, because in my opinion, it's one of the best investing accounts available on the planet. For those in the UK, everybody has a £20,000 per year annual ISA allowance, which they can share amongst different ISA accounts. One of those accounts being the stocks ISA. It allows investors to invest up to £20,000 just in their stocks and shares ISA if they choose to do so. But the kicker here is that it's all free from tax, meaning there's no tax to pay from the realized profits in the ISA accounts as a result of increased asset prices that an investor's been able to achieve. And there's also no tax on dividends either that have been received from the stocks or ETFs that an investor's invested in. The stocks ISA is a huge part of my own long-term investment and retirement plan, and my current account value is sitting at about £80,000 or so, and I've been actively contributing to it since 2017. I'd love to say I'm able to contribute the full £20,000 a year into the allowance, however I'm not quite there yet. However, that is perhaps one of the only limitations, I guess, of the stocks ISA, in that you're obviously capped at that annual limit, which has actually been frozen since 2017-2018 tax year. And if we inflationary adjust that number based on the Bank of England's inflation calculator, well, that ISA allowance, which has been £20,000 for about 7 or 8 years now, should actually be more something like £26,000 today if an inflationary adjustment had been applied. Regardless, many investors manage with that £20,000 allowance, and actually back in the day, when the ISA was first launched back in 1999 by Gordon Brown, the actual stocks ISA allowance was only £7,000. Nonetheless, the top 25 ISA accounts, as reported by MoneyWeek last year, actually has an average value of £11.6 million. So those account holders have certainly been able to manage, despite the ISA allowance being capped at 20 grand a year. And to be fair, I'd probably guesstimate that those account values are probably even higher since that report was released about 12 months ago, because equity markets have done pretty well since then. Now, the reason why those account values are so impressive is because actually, if you'd started your ISA account 25 years ago back in 1999, well, the maximum amount that you would have been able to physically contribute to that account would have been £329,560, which means for those top investors who have been able to generate account values of an average of £11.6 million, well, they would have been able to achieve a mega nominal rate of return of 3,419%, which is a phenomenal achievement. It's an absolutely life-changing amount of money, and if you know someone who happens to have one of those accounts, well, be sure to put them in touch, because I'd love to have a conversation with them. But for the average person right now, of course, those ISA account values are quite different. Of course, it ranges by age, as you guys can see here on screen. In my age category currently, the average value is £9,313. And even in the 65 plus age category, it's £58,787. So if you are doing better than average for your age, then kudos to you and keep going. But I think what's clear here is there's a lot more to do to increase the financial prosperity of the UK public. So let's continue on with this video by now explaining how much you would need to invest in a variety of different asset classes in order to be able to achieve that £1 million milestone. But before I do that, I first wanted to introduce you guys to today's video sponsor, which is Lightyear. Lightyear are a UK and European investment platform which have FSCS protection and are authorised and regulated by the UK's Financial Conduct Authority. Since being founded back in 2020 and with the backing of Sir Richard Branson, Lightyear are currently offering multiple accounts which include a stocks ISA, a cash ISA, a general investment account, and a business account. I'm currently using the Lightyear business account in order to invest some of my own spare business cash into a qualified money market fund, which is currently paying out at 4.44%, which is a whole lot more than what I'm getting in my business bank account. However, Lightyear also offers a 4.25% cash ISA and 4.46% on cash through high interest vaults in their stocks ISA and general investment account. However, do bear in mind in the business accounts, the vaults and obviously the stocks ISA, that money is invested, so it does carry investment risk. One thing that I do like about the Lightyear app just more broadly is that they're a low cost investment platform, so there's no account fees. They've got 0 transaction fees for ETF investing, though fund manager fees obviously still apply. There's a 0.35% FX fee on foreign transactions. Trading fees for individual stocks are capped at £1. And Lightyear are also kindly offering all of my subscribers one free fractional US share of your choice valued at $15, with the chance to also win a $100 top-up. You can find the full terms and the link to make an account down in the description below, or if you simply use the promo code Mitch when you're in the app and deposit $100, then you will qualify for that one free fractional share. Please remember though that investing involves risk and the value of your investments can go up as well as down. But thanks again to Lightyear for sponsoring this video. Now before we dive into the deep end on portfolio returns, first I want to say that every investor is completely different, so everybody's got their own unique risk appetite and their own unique investment goals too. However, within this section of the video, I'm going to be talking about some historical returns from a piece of research that has been completed from Dimpson, Marsh and Staunton in the 2025 Global Investment Returns Yearbook, which looks at 125 years of historical market performance. I also wanted to preface this section by saying I am also going to make some broad assumptions, if you like, but do of course remember that past performance isn't necessarily indicative of future results. However, as it states in the report, you can see the US average annualized returns for equities, bonds, and treasury bills. It also shares the UK average annualized returns for equities, bonds, and bills too. Now, as I've said, many investors will have different portfolio makeups and compositions. However, just for the purpose of this example, I'm not going to provide like the blended returns of these assets together like you would see in like a traditional 60-40 investment portfolio. And instead, we're just going to assess the returns of investing into each individual asset class over a duration of time based on a percentage contribution of your annual ISA allowance to an investment portfolio. So let me explain in a little bit more detail. Oh, and we're only going to compare US performance because that's the better performing one out of the two. I'm also going to make the assumption that that ISA allowance remains capped at £20,000 a year, but of course, ISA rules may and possibly will change in the future. Nonetheless, let's see how long it would take to hit a £1 million investment portfolio based on today's circumstances. So contributing 25% of your ISA allowance, the equivalent to £5,000 per year or £416 per month, it would take an investor 31 years and 9 months for stocks, 51 years for bonds, and 61 years for bills. Now that might sound a little bit disheartening, so let's up the contributions and see how things change. At a 50% contribution, so contributing £10,000 a year to your portfolio, or £833 per month, it would take an investor 25 years now for stocks, 38 years for bonds, and 44 years for bills. Contributing 100% of your allowance to your stocks ISA, or £20,000 a year, the equivalent to £1,667 a month, it would take an investor 18 years and 10 months for stocks, 26 years and 6 months for bonds, and 29 years and 11 months for bills. But before we get ahead of ourselves, what I've just presented is only really half the story, because what I've just shared with you is the nominal rates of return. That's not the rate of return that's been adjusted for inflation. And that's actually the important bit, because that's something called your real rate of return when you make that inflationary adjustment. And that's the thing that's truly going to grow your wealth over time. So let's talk about those numbers next. In which case, in order to hit £1 million investment portfolio value, it would look like this. Now, to be honest, this is probably one of the most eye-opening pieces of analysis that I've put on this channel in probably quite some time. But I'd be intrigued to know what your thoughts are on it and whether you thought it would take longer or shorter to be able to hit that £1 million milestone, at least considering these kind of past rates of return anyway. Now, of course, looking at the nominal rates of return are a little bit more favourable from a time perspective, but it is important that we look at real rates of return because of that inflation piece, because inflation essentially erodes the value of your money over time. So the value of £1 million today won't buy you the same £1 million worth of stuff in 20 or 30 years from now. So the value of a pound pretty much becomes worth less and less as each year goes on, providing a positive inflation rate. And as at the UK averages anyway, that averages out at about 3.5% per year based on this paper. And over in the US, it's about 2.9%. So it's important that investors are putting their cash to work to be able to outstrip that rate of inflation and therefore increase something called their real wealth. And that really is the only rate of return that investors should truly be interested in, because that's going to be the thing that actually contributes to a real increase in your net worth and portfolio value. But let's say an investor looks at those numbers and thinks that's far too long for me to be able to reach millionaire status through the means of investing. Well, you'll probably be glad to know that there is a way that that can be shortened. And that's through a very key concept, which we've kind of flirted with already, which is called compound growth, which Albert Einstein says is the eighth wonder of the world. And actually, it's a mathematical phenomenon that still blows my mind to this day when I plug the numbers in on a compound calculator. I think there's probably this common misconception that when you're growing an investment portfolio, it kind of happens in more of a linear fashion. And that probably would be the case if you held most, if not all of your money in cash, or if you held your money in kind of low risk, low return investments. Whereas the reality is that compound interest is a bit of an eye-opener. In that, yes, to begin with, it may feel like a little bit linear in terms of that growth, but over time, that growth on your portfolio will very much become exponential, providing that you're probably invested in slightly more aggressive, higher risk, higher return assets. Just to put some perspective on this and taking our 50% contribution example, assuming an ISA allowance of £20,000 being constant, with a 100% stock portfolio, as we've said, it would take 31 years and 3 months to hit £1 million. Not too bad considering if you'd started at 25 years old, you'd be a millionaire by the time you were like 56 or 57 years of age. Of course, it's quite a sweeping statement. I'm sure many of you in the comments will be like, well, what 25-year-old has £10,000 a year spare to invest? But I'm just going to have to try and make some assumptions, so please forgive me. But nonetheless, it's still a great achievement, and you would be far ahead of the average ISA millionaire in the UK, which is currently 73 years of age. But interestingly, when we look at compounding from a time perspective, well, in order to generate that first £100,000 from age 25, it would take you to about age 33, so about 8 years or so. However, to generate the final £100,000 in your £1 million portfolio, well, it would only take you about 18 months, from age 55 and a half or so to age about 57. That is the true power of compound interest within an investment portfolio, whereby the longer that time goes on, the more portfolio compounds its returns, and therefore the quicker the portfolio value accelerates. And this compound effect can be manipulated in a way to an investor's advantage, because compound interest is a function of time, value, and returns. And these three conditions can of course be changed to change the forecasted outcome of an investor's portfolio. Because if an investor can increase their contributions and potentially increase the returns they're able to achieve, this will massively reduce the investor's amount of time to reach a specific goal. Or if, let's say, the investor is happy with their current contributions and the rates of return that they're able to achieve, well, they just need to invest for a little bit longer to achieve their portfolio milestones that they have. Or to kind of flip that the other way, it's to just get started as soon as possible. Compound interest is literally the reason why Warren Buffett, who's one of the richest blokes on the planet, was able to generate over 99.9% of his net worth after the age of 50, where he was already valued at like $300 odd million and had more money than you could ever imagine. Whereas now at the ripe old age of 94, he's worth over $160 billion. So with time, yes, being an ISA millionaire is more than possible. All it takes is a consistent long-term approach to investing, sufficient contributions over time, and also just assuming that the markets provide a sufficient rate of return in order to be able to get us all there. And I guess that's just in the hands of the financial markets gods. My hope through making these videos is that those 5,000 ISA millionaires that we have today is an exponentially higher number for the next generation. So if you want to come on that journey with me, then be sure to subscribe to the channel. But before you go, YouTube thinks that you'll enjoy watching this video next, so be sure to click on that now. With that being said, I'll see you over in the next one.